Very good evening, everybody. Welcome to the webinar, Still Bullish About Crude Oil and Stocks Amid Hyperinflation. I'm Ming Hui from Flip Nova, and this webinar is held in collaboration with Trading Central. Speaking to us tonight will be Mr. Ming Lam, Trading Central Deputy Head of Research. He'll be walking us through the major market conditions, including hyperinflation, influencing the stock and oil markets through both fundamental and technical analysis. Do look out for his views on the key stocks to watch out for too. Before that, we will have Ms. Dominica from Trading Central to start off the session with some useful plugins that can be integrated for free onto the Phillip MT5 trading platform. Just a quick reminder that if you have any questions throughout the course of the webinar, please feel free to drop them into the questions box as we will have a live Q&A session towards the end. And now, without further ado, let's have Dominica speak to us.
Hello, good day, good evening. Nice talking to you all again. My name is Dominika Lach. I am Client Success Manager in Trading Central, and I quickly want to present Trading Central tools available for Phillip Nova users. So if you have Phillip Nova MetaTrader 5 platform, you can download a set of indicators as well as additional tools from their website. Where to find them? You just need to choose the top platforms and then Phillip MetaTrader 5 suite, and you will end up on this page. Then you're going to get to the Download Trading Central Indicators button, and from here you will start downloading our plugin. So this is a quick setup. Once it's downloaded, you just need to click agree on a couple of things, and plugin will be installed on your MetaTrader platform. I will just show you now where you can find it. So under in the navigator window, under indicators, you will find Trading Central Indicators. There is a couple of them, where Analyst Views Indicator is one of our flagship tools, and the tool that should help you to trade better and more efficient. You just need to drag and drop it to the chart, click OK, and you will receive the lines overlay on the chart and a description on the bottom part of the chart. So we indicate the trading central preference for this particular asset for the Australian dollar, American dollar pair, Forex pair, is decline. So we would suggest sell position. You have the whole description here written in yellow. And you also get the lines, the support and resistance lines, which can be taken as a take profit and stop loss. So in case the preference is decline, we would suggest that you open a sell position. And then the red line would be your take profit. And the pivot line would be your stop loss. It could be your first stop loss. Of course, if you have appetite and confidence, maybe you can take another green lines as a stop loss as well. So this is just a short demo how you can use the Trading Central indicators. But that's not all that is included to the Trading Central plugin. You can find more in expert advisors section under Trading Central again. If you drag and drop, click OK again, you will have a pop-up window with 3 of our powerful tools. One of them is Forex Feature Ideas, where you get a randomly selected 10 bullish and bearish ideas. You can customize your settings here according to your needs. For example, bar sizes, holding times. If you are interested in, let's say, more longer term trades, we can change it up to 48 hours instead of up to 12 hours. And when we click OK, you will get totally new ideas. This is all based on technical analysis, and we work here completely with the artificial intelligence. So this is no human involvement here. The next tool we have is the economic insight. I think everybody is looking at the economic announcements very careful, and with this tool we are making you aware about whatever is important going on in the world. It looks like a typical economic calendar, but it gives you also indications that, for example, we measured that with the announcements on the in the particular country, there is some big volatility. For example, here in the past events, there was volatility of 653 pips in the 4 hours after the event. So it means that it's a quite volatile event. This one even more. So this gives you some indication if it's good to trade on economics at the particular moment. What's more, in the economic calendar, economic insights, you get some more insights. So you get 4 charts. First one is the event chart. The second one is the price chart. So you can compare how the particular event influenced the Forex pair in the past. We also have the volatility chart. So you can check what was the volatility for the particular Forex pair again, and in the specific time frame. And also you can see the impact chart. So we measured here the range of pips and following the event, and you can also, thanks to that, prepare your trade. So if you combine, for example, the economic insights and our indicators, that gives you a lot of information before opening a trade on the platform. And the last tool I wanted to mention is the TC Market Buzz. So this is your news desks, as we like to say. It's a beautiful bubble interface. If you see here, it's designed for Phillip Nova. The team that you're gonna see is the Phillip Nova team. So it will show you the news for dedicated assets that you can trade on the MetaTrader platform of Phillip Nova. And the concept is that the bigger the bubble, the more news about the specific subject or asset. If we zoom a little bit in, there is interesting bubble, among a lot of bubbles with the Forex pairs, for example, and commodities. We have the inflation expectations bubble. So you can see there is a lot of publications about this specific subject. And not only you can see the news volume, it's like 262% more in the last 24 hours. You can see also the news feed, so that you can read the news about this specific subject here. But if you are in, this comes into the topic of our today's webinar with Ming about the inflation. But if you are interested about some more, I would say, analytics about the specific assets, for example, Euro USD, you can see the news volume, the split between news, web, and social. You can see the trend analysis. If you click on it, you will see our analysts, what they are predicting. And you can also see the news history against the news volume, the most discussed topics. And again, on the right-hand side, you can go through the articles that our AI searched through the web and found with the topic of Euro USD. So I hope this tool would be interesting for you. I highly recommend everyone to download our plugin from the Phillip Nova website because it's free for all the users. And in case you have any questions, you can always reach out to Phillip Nova employees, and we are happy to help and assist you. Thank you for now. Bye-bye.
Thank you very much, Dominica. Those tools are really useful. Well, hello, ladies and gentlemen, friends of Phillip Nova and Trading Central. Good evening, good morning, or good afternoon, depending on where you are. I'm very pleased again to share with you those market observations I have made so far this month. Okay, we are trying to make this webinar a monthly event, and we hope you like it. Okay, thank you very much. Okay, so can you see it? I think so, right? Disclaimer, this is me. Okay, so I am a technical analyst, or just say an analyst. I observe markets, market price, stock price, commodity price all day. Okay, this is my job, and I'm also very pleased to share with you all those observations I have made. Okay, and I hope those observations I'm going to share with you today will be very useful to you. Okay. Now, today I will show you some charts and some assets, oil price, oil stocks, and most of them could be, you can find most of them on the Phillip Nova CFD platform website. Okay, you can find something there related to trade, easy. And now back to our title today. Well, in fact, are you still bullish about crude oil? And so, in fact, I'm talking about oil stocks, okay, and hyperinflation. So two main components: crude oil and oil stocks, and hyperinflation. So why do we choose this topic? Okay, it is because of you. And every time we have received quite a number of response, questions or requests from our audience members. And last time, I have received quite a number of questions about crude oil. They say, "Hey, Ming, can you talk about crude oil price? Is this rally going to an end?" Or they want to talk about the oil stocks. Hey, Ming, can I join to buy some oil stocks? The oil sector, is the party going to an end? Well, I will answer them here. And at the same time, people are very worried about the hyperinflation. Okay, hyperinflation. So I can also talk about it here, no problem. So, but I would say, don't worry. Okay, don't worry about that. So today the webinar will last around. I will make it short because I have a number of ideas I want to get you across to you, and while not wasting you a lot of time. Okay, so let's go. Now, this is my style to give you the stuff that I conclude at the very start of the webinar. Okay, conclusion. I can say we are going to have, no, we are already in a recession. Okay, but no worry, no hyperinflation. At the same time, we are going to witness a growth collapse, collapsing growth, and demand destruction. Why? Higher price. Okay, and maybe you are more familiar with this than I am. Strong dollar, very strong. Okay, today we are going to see dollar yen 138 already, right? Euro, well, we are shouting, we are going to celebrate if it's going to going to parity. I know you have heard the word parity with the US dollar. Okay, it means euro is going to $1. Okay, and we are close. We are close. It means the US dollar remains to be very, very strong. So I will show you that oil price and stocks, they are consolidating at the moment. Okay, I remember last time in June 9th, after the webinar, some audience members email or writing some questions to me saying that, the oil sector seems to be very strong, not falling. And should I join? Should I join? So I will give you some charts to explain. But while I say oil price and oil stocks are depressed, and you have to mind something, we are going to see a trump card for oil price. Okay, if this one play out, oil price will jump, will sure. Okay, but what is it? Please stay tuned, and I will let you know at the end of this webinar. Okay, so hyperinflation. Okay, I know some of you are very worried about hyperinflation, and it is a rapid and uncontrollable surge in prices. Okay, we are not talking about 9%, 8% per year. We are talking about price rising 50% per month. Okay, per month. And normally, according to our experience, it happened in wartime, economic turmoil. Okay, and it happened when the government, central bank, print money excessively. Okay, well, in fact, nowadays we are seeing central banks around the world printing money excessively, but we are not to that point. Why? Because hyperinflation is always associated with loss of confidence in government. Okay, if you lose confidence, if people lose confidence in a government, well, they will get physical things rather than paper money. They get gold. Okay, they will get well, anything that you can take away, valuable, but not paper money. And okay, so we have several examples of hyperinflation in history. They include Germany in 1920. Okay, the Weimar Republic just before Hitler came into power. Okay, so we have in China, in mainland China, in those days, 1940s. In those days, China was ruled by the Kuomintang, the Chinese Nationalist Party. Okay, well, you know that people lost confidence in that government, and eventually we saw a regime change, a change of regime, and the rest is history. Okay, and now not long ago in 2008 we saw Zimbabwe. Okay, their paper note get into billions something. Okay, these are all examples of hyperinflation. But nowadays, in those advanced civilization, advanced country, okay, advanced government, for example, the US, the UK, and Asia, I don't see we have a chance for hyperinflation at the moment. So don't worry too much. And but we have high inflation, and but to me, a high inflation, we are talking about 9%, 8%. Well, it's also going to retreat. Okay, so I will explain my point going forward. Don't worry. Okay, so if you like me like to read book or listen to audiobook, and you are interested in inflation or hyperinflation, have a look at this one. When money dies, okay, it talk about the Weimar Republic just before Hitler came into power. All right, well, it tells you that irresponsible spending or money printing by the government just lead to this one. Okay, you see this is rubbish, and you look closely, it is not just rubbish, it's paper money. Okay, they scrap it like rubbish. Okay, if you like it, get one and have a look. All right. So no hyperinflation. All right. But what do we have now? The following several slides, I will tell you the most updated. Now, I can assure you they're updated, up-to-date charts on macroeconomics, on which economic data or economic piece of data that I would like you also to look at when, if you're interested in the macroeconomic and also in the stock market, commodity market. These economic data are very important. You can negate all others, but this few you have to concentrate. Okay, now let's go. CPI or inflation rate. It was for the U.S. It was released last night, and it was very high, 9.1% inflation in June. Okay, last month, and it is the highest inflation rate in over 41 years. Okay, the highest level since 1981. Okay, CPI, and it seems to be very worrying, right? But if you remember, in the last webinar in June, I shared with you another indicator that the Federal Reserve central banks are watching closely. It is called core personal, I repeat, core personal consumption expenditure deflator, PCE, core PCE we call it. Okay, it reflects really how people are really spending their money. Okay, it's very interesting, and this one is up to for May. The latest data is up to May. Okay, the next one will be released at the end of this month for June. Okay, we are seeing a retracement. Okay, but well, I cannot predict if it will go forward down or it will rebound. Okay, we have to watch. But it is a good sign to me that it is not surging up at the moment. Okay, so watch this one, core PCE, and yeah, and it take a reference of this, and also watch the CPI. And I know most investors are looking at CPI, but I would like to have a look at this one. And what's next? Now this one, University of Michigan consumer sentiment. This is huge. Okay, and we are seeing how people spend the money in PCE. We are seeing how prices are moving in CPI. But this one is very much on the demand side, how people are willing to spend their money, or they will plan to spend their money. Have a look at this one. Now I have the data up to the 1978, and last month, for June, it is down to 50. It is the lowest level on record. Remember, University of Michigan's consumer sentiment has got down to the lowest level on record. Okay, now you have to think about if people are willing to trace the price. If you want to buy, for example, if the price of gasoline is surging, rising, well, are they going to buy whatever amount of gasoline they want, despite the rising price? No, they will say, hey, maybe I will postpone my trip, maybe I drive less, something like this. And if they like a car and the price is rising, and they will say, hey, I will postpone the purchase of a car. That's it. Okay, you see, not everyone is chasing price. Okay, I mean the price of goods. They buy goods or services, they are not tracing it. Okay, this one 50, record low level. Remember it. And another one piece of to me, it is very important piece of information is this one, ISM manufacturing PMI. Okay, now PMI, whenever you a little bit knowledge on this PMI, whenever you see PMI, they are talking about 0 to 100. So the key point is a 50. If this red line, okay, if the PMI is above 50, 51, 52, 60, it means the manufacturing activities are expanding, okay, expanding. However, below 50, 49, 45, 40, it means contracting. This chart, the yellow one, those are major index. I will mark it in yellow, okay. The blue one is just for reference. The blue one is Nasdaq 100 index. Okay, now this one, ISM manufacturing PMI was for June, and the next one will be released on August 1st, and that one will be for July. Okay, so for June, we are seeing a downtrend for the past, well, we can see several months. Okay, and for June, the number was 53. Okay, 53. Remember, the line of 50, 50 is the division between expansion and contraction. And now this following is very interesting, very interesting. Have a look, focus on this one. I on Bloomberg Station, I try to gather some information on this one. ISM same as the previous slide. It is the ISM, okay, ISM manufacturing PMI, the yellow one, okay, the major one, yellow one, and the blue one is the for reference. The blue one is what? Is the Nasdaq 100 year-on-year change, percentage change. You can see that both charts are synchronizing most of the time, but for the past, I can say past 2 to 3 months, we are seeing a rapid punch in the stock market, particularly for growth stock, for technology stocks that you can find in the Nasdaq 100 index. So now, if the two charts, the yellow one, ISM manufacturing, and the blue one, Nasdaq 100, okay, change. If they synchronize further, you will see that the yellow one, ISM, should go below 50, okay, down to 40 something at the moment. Okay, I have to raise my hand. I have no predictive power, but I like to play around with charts to give myself and you some kind of reference. Okay, so from this chart, I can see that ISM will most surely go below 50, and that is contraction. Okay, and we will confirm recession. But I'm very convinced that we are now already in a recession. Okay, so next one. Yield, Treasury yield. Okay, this is also what most participants in the financial market are watching every day. Okay, every day. Do you have I discussed with you some classical technical analysis pattern? Now, can anyone of the audience member tell me what this pattern is going to be? Yes, it is a head and shoulder, but not yet confirmed. It is developing, and it most likely it will be a head and shoulder bearish pattern. This is the head, left shoulder, and right shoulder, and this will be the neckline. If it crosses the neckline, we are there. We can confirm this pattern. So remember, 2.7% of the 10-year Treasury yield will be the neckline and will be the most important level. Okay. Well, back in June, we are seeing 3-point-something% in the 10-year yield, and people are saying that it will go to 4%, 5%. But if it confirms this pattern, I would say yield will coming down. And this, if 10-year yield coming down in this way, it will further confirm my view of a recession. Okay. Now, and also the following one will be one that you are hearing, you are listening. You will be hearing most of the time on financial radio, on financial TV, yield curve. So what is a yield curve? I tell you, it is very easy. Yield curve is just the difference between two treasury yields. Most of the time, people will talk about 210. It is the 10-year treasury yield minus the 2-year treasury yield. Okay, percentage. Okay, you can see that most of the time the yield is positive. This white horizontal white line is 0. Okay, most of the time it is positive, but sometime red area, and now we are now also negative. In negative yield curve, most of the time it will point to recession. Okay, and I'm quite convinced that we are already in recession. Just have a look at this yield curve. It is a minus 23. It is a basis point, and they talk about basis point. This is basis point. Okay, 1 basis point is a 0.01. Okay, in the percentage, 0.01 percentage, and this is the deepest inversion since the 2000 year 2000, 22 years ago. It is even worse than those you see in 2006, 2007. Okay, so are we in a recession? You tell me. Okay, so this is a yield curve. So how about the Federal Reserve, US? Now, last time in June, they increased interest rate by 75 basis points. It's huge. Okay, it's big. And this month, after the CPI data released yesterday, now people are saying that they are going to increase another 75 basis points. And some even say the Fed will increase rates by 100 basis points. That is 1 full percentage. Okay, now currently the rate is 1.75. Okay, we expect it in most cases we expect it at 2.5. But if it really raised by 100 points, well, that will be 2.75. Okay, remember back in 2019, they raised up to here 2.5, and then the Federal Reserve pivot. We call it pivot because it turned down. It turned to the other side. Okay, it said, okay, we know that we have a recession. We know that something's wrong. We should stop now. Okay, so do you think the Federal Reserve will do the same this year or next year? Well, to me, I can tell you, the projection is the Fed will stop within this year. Maybe in July, that's this month, they will raise one more time, and then in September, one more time, and that's it. Because they don't want to plunge the economy into further recession. I know they are having a hard time. Okay, first of all, you have to control inflation, and then you have to kick away the recession, and it is to me impossible. I think they will know that we are in recession, and they will stop within this year. Okay, let's see if I am wrong, and if they will increase all through 2023. Okay, and so this is the macro background. And now the following ones, I will share with you some asset price, oil stock price, okay? And I will talk about quite a lot of technical analysis. But before that, I want you to have take a look at that. Well, we cannot trade with technical analysis along. TA mean technical analysis. Okay, because we are mostly we are using TA to show signal and some confirmation, and also we try to identify some patterns, just like in the previous 10-year yield. We recognize there is a development of a head and shoulder bearish pattern. Okay, something like this. Do not trade TA alone, because in trading there are a lot of factors that are affecting prices, okay, which TA cannot handle. Okay, so we have to be well-rounded. Okay, not just on TA, but today I'm going to use TA to give you some kind of reference, okay, or to tell some story about the stock price. All right, so let's go. Now, CRB index. Now, this is in the financial market, we call this a commodity index. It should have something to do with Reuters, something like this. But anyway, its index is 39% about energy, okay, and it is 41% about agricultural commodities, just like wheat, just like cotton, something like this. And also we have precious metal in that, gold, silver, and also industrial metals, copper, something like this. Now, this index is reversing, as it's very obvious, right? Reversing to the downside, and it has already broken below its long-term rising trend. Well, in June. Okay, remember this pattern. This kind of pattern, you repeatedly see it. This pattern in the foreign charts, because they're almost identical for whether it is oil price or oil stock price, something like this. Okay, now we can see that the commodity market is a reversing course to the downside, or we can say in a consolidation. Now this is crude oil, WTI crude oil, US. You see, this is a very good example of rising trend channel. We are trading a channel for, well, 1 to almost 3 months, and then turn to the downside. Okay, at the same time, these are two technical indicators, momentum indicators. We use it to show momentum. MACD and RSI, relative strength index. Well, frankly, I do not see any rebounding potential for oil price at the moment. You can see they are all heading downward. Okay. Okay. And also, oil price is sticking to the lower Bollinger Band. This is the lower Bollinger Band. This thin red line, and the upper one is the upper Bollinger Band. Okay. In theory, just in theory, 95% of the time, stocks commodity price will trade within the space between these two bands. Okay, upper band, lower bands. Okay, and well, we are seeing it is very weak if it keeps sticking to the lower bands. Okay, very weak. Okay, now I mentioned strong dollar in my conclusion at the very start of the webinar. Now we are studying US dollar and the relationship between US dollar and oil price. So this chart is quite interesting. Now let me first tell you, the yellow one is the one, the major one that we are trying to study. It is the oil price. Okay, the yellow one is the oil price. The blue one is a reference. It is Dixie, US dollar index, Dixie. Okay, it is inverted scale. Okay, so it is blue. Look at this. It's blue, and the further downside it goes, the higher value it is. I invert the scale. Okay, okay. Why? Because in commodities, normally the commodity price are in inverse proportion with can I say proportion? Inverse well direction with the US dollar. Okay, it means those commodity price are priced in US dollar. If the US dollars get more expensive, got higher value, got more strength, it means a little a smaller portion of the US dollar can buy the same thing. It means the price of those commodities will be lower. Okay, I repeat. So commodity price are usually inverse to the development of the US dollar. If the US dollar get more expensive, usually, more expensive, more valuable, I can say, appreciate, the US dollar appreciate, the commodity price in terms of US dollar will get lower. Can you follow me? Okay, now this chart, this blue one is an inverse US dollar. And in most of the time, I use the same phase. We are synchronizing, okay? Developing, they are just like tango. They are dancing with each other. But for some reason, we are seeing a huge divergence currently between the oil price, the yellow one, and the blue one, Dixie US dollar index. So if we follow the US dollar index, we could see that oil price should pull back strongly to get in sync back with the US dollar. Okay, that is, we should see, in fact, it is starting a downtrend. That is, we should see a further pullback of the oil price. Okay, can you follow me? Okay, so this is one of my ideas I want to give you today. Now, also we have US WTI oil. Also, we have international, or some people will say UK Brent oil. Almost the same pattern. Now we are seeing 90 back below the 100 mark. Okay, and yeah, and for oil we are seeing, and for WTI oil we are seeing a trading target at around 80s, in the 80s. Okay, for Brent we are seeing it in the 90s short term. For US crude oil, WTI crude oil, we are seeing it in the 80s, back down to the 80s. Okay. All right. And now, after the oil price, I would like to talk about oil stocks. Okay. So in fact, this is the slide I showed in my last webinar. Okay, in June webinar. At that time, do you still remember XLE? XLE is the ETF, exchange traded fund, called XLE. It includes a lot of listed energy oil stocks in the US. Okay, XLE is more concentrated on two stocks. One is called Exxon Mobil, and the other one is called Chevron. Okay, I will talk about them also later in the webinar. Don't worry. And at that time, last month, June, we see that XLE year to date growth is 61%. Big, right? Not bad. But this one is the most updated one. XLE now, 1 month later, is year to date growth is just 20%. Okay, 61% back down to 20%. Okay, and also you can see XOP. XOP, I will also talk about it. It is an ETF also. ETF including oil and gas exploration companies. Now you can see that this chart is very useful. Up to now, year to date, only the oil sector, the two ETFs are pointing to oil sector. Only the oil sector stocks are recording positive returns for year to date. So XME year to date down 4.7%. XME, it is a metal exploration. Okay, you can see XLI XLI is I for industry. XLF, F for finance, down 20% year to date. SPX, you know that? It is S&P 500. NDX, down 29%. NDX is Nasdaq 100 index, and XLK is the technology sector. Okay, at the bottom, 38% down, 38%. Do you know what is XSD? Semiconductor. Well, I know a number of audience members. They are very interested in the semiconductor sector. Okay, let me know if you want me to talk more about this next time maybe. And XRT is the retail sector. Year to date, down 35%, and semiconductor down 38%. We are in a very, very bearish market at the moment, but this bearishness is the most highest level for several decades, and I expect this stock market plunge, stock market decline is coming to an end, should be coming to an end. Maybe we can get lower one more time, I mean one more leg down, but to me the damage has been done, but it is near the end of the tunnel. Okay, so when I'm seeing that the oil sector is coming down, I'm thinking about that we will have another round of sector rotation. That is, investor will rotate out of the oil sector and into some other very damaged sectors, such as semiconductor or other technology sector. Okay, I mean stocks. Okay, so let's see. I will monitor it closely for you, and in case I find something, I will share with you in a webinar. All right. So now XLE, it is an energy sector ETF. You see, the pattern is pretty like the oil price I shared with you before, and I have to say some more about this one. The momentum indicators, MACD and RSI, and again I have to stress that the MACD is bottoming, but I have to see a very marked rebound to consider whether I should join the party, or I mean buy some stocks or not, like this. Until then, I will stand on the sideline. Likewise, the RSI is very weak at the same time. Okay. Now another ETF, remember XOP, also energy sector ETF, but it is more diverse, and it is not just concentrated on the two major oil stocks, Exxon Mobil and Chevron. It is more diverse, this ETF. Okay, same story here. Not very impressing on the RSI. Okay, so a major stock on the Exxon Mobil. It is still captured by the 20-day moving average. Do you see a cross here? 20-day cross below the 50-day. The thin blue line is a 50-day moving average. The thin red line is the 20-day. When we see 20-day cross, 20-day is faster moving average. You agree? And 50-day is the slower. Okay, when we see the faster one cross below the slower one, we say the trend is most probably to the downside. Okay, same story on the momentum. Nothing exciting at the moment. Okay, Chevron. Yeah, same, captured by the 20-day moving average. Okay, some people would like to buy here. In fact, when they see the MACD, I mean they will as a testing, they test the stock. They will buy at this low level. when they see those momentum at this low level. Okay, but it should not be a time for you to be aggressive on this kind of stocks at the moment. All right. Now, this is PetroChina, one of the 3 major oil companies listed in Hong Kong, Chinese oil company. And last webinar we saw this at here, and after that, no way. And even you can see that this Chinese oil stock, the momentum is still worse than those listed in the US, Exxon Mobil and Chevron. Okay, maybe it is heading to the $3 mark. Okay, so last one, CNOOC, beautiful up channel for 1 to 3 months. Okay, but well, when it swing to the downside and could not break above the 220-day moving average, is bearish. Okay, and also these momentum indicators, I can say agree. All right. Okay, so now I have talked about the oil price and oil stock price and the oil sector and the stock market in general. But at last, I want to share with you one point that that keep me awake most of the night, and that is geopolitical tensions. Okay, in APEC. Well, we have to watch closely the actions of US, China, Taiwan, North Korea, Japan, and also Russia. Okay, you know what? To narrow the region that I'm looking at, I would say I'm looking at Northeast Asia with the center in Japan. Okay, you know what? To the north, Japan has a very good neighbor called Russia. Okay, and a good neighbor called China, and we are seeing potential for conflict every day. I can say on an everyday basis. Let me share some something I've gathered for this month or two. Well, this is a chart released by the Japan military, Japan Ministry of Defense, back in the end of May, when the leaders of the US, Japan, India, and Australia were having a meeting in Japan. Okay, we detect several bombers, airplane, jet fighter airplane from China and also Russia circling around this area. Okay, Japan. All right, and this is a show of force, and this is not good. And also, the new our Japanese Prime Minister say Ukraine today, maybe East Asia tomorrow. He's talking about some issue between Japan and China. Okay. Now, I hope following this webinar, you will also like me. You will also focus on this kind of news, not just focus on COVID-19 news or some entertainment business news. Focus on this news. Okay, this kind of news will be beneficial to your trading, I'm sure. Okay. Now, almost every week, I can find a piece of news like this on the internet, everywhere. Russian Navy ship, okay, getting close to Hokkaido. Okay, of course, they are not going to be tourists over there. They are doing something, all right. And then we have Navy ships, Russians Navy ships in the Chiba Prefecture, close to Japan. Okay. Now we have Chinese and Russian naval vessels. Okay, all kinds of these things, and I have a feeling that we have a barrel of gunpowder in Northeast Asia, close to Japan, Taiwan, China, something like this. And that keep me awake at night most of the time. And currently, recently, we see that China say that all these warships, naval ships, or merchant ship has to report to them, well, or have to register with them when they pass through the South China Sea. And of course, the U.S. will not comply, and you see that expelled U.S. destroyer. And well, this is really, I can say, dangerous. I don't find it interesting. I find it dangerous. If it happens 5 times a week, and in several months, maybe one spark will ignite something. All right, I don't like to see that. And of course, some country will give us some kind of surprise in times. Russia say they are going to take back Alaska. Well, it said, well, in fact, Alaska was sold to the US, well, some time ago. Well, if you are a history buff, check it out and let me know. Yeah. And at the same time, they are not just saying about this. We can see response from the other side. The US military has reactivated the airborne division in Alaska. For what? For what? For someone who threatened them. Okay, so I tried to give all this kind of news. I tried to tell my friends who are not in the financial market, who are not in the financial industry. I'm telling those friends about this kind of news, but it seems they are not very interested. They are more interested in COVID measure, when Japan will open so that they can go there for tourism, and whether, well, show business, the entertainment business, which singer is married to which one, blah, blah, blah. They are not interested in this one. And when you come to my webinar, I hope going forward, you will turn your focus, or in times you have a newspaper on hand, or you're surfing some website, have a look of this kind of news. It should be very useful, beneficial to your trading. And at last, I want to tell you one more piece of news. I can say just at the start of this month, July, JP Morgan say oil price can surge up to 380 on the basis that Russia cut their oil supply, and in retaliation against those Western sanctions. Okay, this is very horrible. And do you think Russia will really cut those oil supply? I think so. They will do that. I have no doubt they will do that. Okay, so let's hope that we will have peace going forward and not conflicts. All right, because if we have conflicts, everything will be in disorder, and we will have a very tough life. Okay, so these are all those ideas that I want to share with you. The main idea I want to share with you in this webinar. So, member of the audience, any questions?
Hi, Ming. Thank you for the sharing session. We haven't received any questions from the audience so far. So is there anything else you would like to share while we wait for the questions to stream in?
Yes, I think the audience members, they can write to you, email you, or whatever, to which Phillip Lover to tell me what they really are interesting, and for the next webinar, next time they want me to get deep into, and I can share my insight with them. And yeah, that is very helpful. Just like this time, this oil price, oil stock, hyperinflation, they are all coming from our lovely audience members. Okay, any questions that we can discuss?
We have one. Someone asked if you have any views on OIH. I think that is one of the ETFs, the oil ETFs.
OIC.
OIH. H for Holland.
OIH.
Yeah.
Can you see my screen? Okay.
Yes.
OIH. Record oil service. Oh, oil service ETF. Can you see my screen? Right. Okay. So same. We have the price here. We have the MACD here, and well, RSI is 32, and I can say sorry. I do not see any rebounding potential from here, and no confirmation of any bullish reversal at this point. Okay, i.e. it could drop further in case oil drop further.
Okay, the next question is: Do you recommend to buy oil shares right now?
I don't. As judging from the technical indicators are not indicating any entry point at the moment. They are cheap. I know they are compared to a month ago. Those oil stock price are cheap, but they could get cheaper if the recession play out, and oil will drop to the downside. Except the trump card I discussed at the very last part of the webinar happened. Is if you see conflict in Northeast Asia, well, quite sadly, I expect to see some conflict there, and that will give oil price a boost. Okay, so I know if I tell you not to buy at the moment, it will be very discouraging. And let me rephrase in this way: if you like to own some stocks, you can, but don't be. It is not a time for you to be aggressive. That's all I want to say.
Okay, thank you for your answer. The next question is: Do you have any views on China and Hong Kong?
Those, it seems that for China first, the economic situation is not very encouraging at the moment, and I know there's some of course it has something to do with the lockdown. Some cities are locked down from time to time, and I think the most important part at the moment is looking at our real estate sector in China. I know that there seems to be some kind of unpleasant happenings in that sector, and I'm watching closely also. And you know, the real estate sector in China is huge, and it is a major pillar of the economy, and we have to monitor it very closely. Regarding Hong Kong, well, it very much depends on China at the moment. I mean the economy and also the stock market. You see, most stocks in Hong Kong, I can say 80%, 90% are Chinese firm having well, doing business related to China. Okay, so if you have want to get more into the Chinese economy, I advise you to look at the real estate property development sector first. Seems to be something happening. All right.
Okay, thank you for your answer. The next question is: What is your forecast for the S&P? Like, what levels can we expect down the road?
S&P, well, as I said, can I pull out a chart, something like this? S&P here. Yeah, S&P. I expect, as I said, I expect we are nearing to an end of this decline. That will be another, but I will not be surprised if we see another leg down. Okay, and if that happens, that will be the last leg. Okay, I believe that will be the last leg, and I will say it will test back to this level. Can you see that? This level, the previous low, and then or a little bit lower, 3,630, something like this. Okay, and then it should turn up. It should turn up. I would just suggest that we should not be very bearish. We should not be very bearish about stock equities market at this time. Okay.
Okay, thank you. The next question is, what are your views on SIMSKI?
On what?
SIMSKI, the Singapore MSCI index.
MSCI index. Let me see. It is a future one, and more or less the same. And I would also like to look at STI, but well, more or less the same. And you can see we are having a wave lower highs here, and well, in fact, we as it is also at the same time same as my view on the S&P 500. So more or less the world market, the global markets are following the US major indices. So I would see that I would not be surprised to see another leg down, but it seems we are done with all this bearish market for over 6 months. Okay, and but I do not see we have to be very aggressive at the moment. Well, if I know that some investor, they would like to buy some, to keep some, not very aggressive, but buy some at this very low price. But and I will agree with that. In fact, in times I also buy some at this bargain price, but not to be very aggressive for the moment. If we are going to be aggressive, we should be aggressive, then I will tell you. Okay.
Okay, great. The next question is, do you have any views on agriculture and base metals?
Base metal, agriculture is I think the Ukraine war has left the price for some have give the price some premium already, as I know, and yeah. Maybe I don't put out a chart like this. And on base metal, I think you're talking about copper. So in fact, I like copper. Okay, why? Because those EV electric vehicles, the batteries, they are all consuming copper, and you can see the EV is the main is a rising trend. No one can stop. So I quite like copper, but I know copper have been hammered, have been impacted recently, along with this recession play. So I will see for the long term, copper will do very well. Okay, short term, just follow the recession play, and it will get hammered. Okay, this is my view.
Okay, thank you. The next question is, in your opinion, which oil stock is the most involved in renewable energy transition?
Which oil stock? in renewable. Oh, I have to do some research first. I cannot give you a straight answer here. And I know most of the big names, BP, Exxon Mobil, they are involved. And even in China, some good names, they are separating their renewable energy set unit for listing. Have you heard about Datong renewable energy, something like this? And yeah, and I cannot give a very conclusive answer at this moment. Sorry for that. Maybe I will do some research and come back to you.
Okay, great. Thanks, Ming. We have a next question. This is asking what will be the effects of the Fed rate hike in August. Do you think it will be another 1% hike?
Wow, 1% hike. That will be a very very aggressive move by the Fed. But in fact, we can see that the stock market has already priced in those aggressiveness of the Federal Reserve. Just look at last night. Last night, we have a 2% drop in Nasdaq 100 index. And then at the end of the day, it just dropped 0.1% after the 9.1 inflation data was released. And to me, my feeling of the stock market is that the market has already priced in those aggressiveness of the Fed. As I explained before, I do not think the Fed could be more aggressive going forward, and they cannot neglect the recession that we are in. Okay, so that's why I say we can have another nick down in the stock market, but that's it, and well, there will be not another nick down, but at this moment I would suggest we are looking for some we are watching or put them in a watch list. I mean, put some stocks in our watch list. So if the signal confirm they are in a bullish reversal, we can get in. This is my view.
Okay, thank you for the answer, Ming. That was actually our last question for the night. So shall we conclude the webinar here?
Okay.
Yep. Okay, cool. Thank you. We will be sending everyone a link to today's webinar recording so everyone can watch it again if you'd like to. And like Ming mentioned earlier, please let us know what webinar topic you would like to hear next. And you can send in your suggestions to us via the survey that will appear at the end of the session. That's all for tonight. So thank you again, Ming, and thank you everyone for your time tuning in to this webinar tonight. Goodbye.
Goodbye. Thank you very much. See you next month.